Hi traders, this is Cynthia of Day Trade Forex, and in this training video I'm going to show you how to use my new buy sell close button, which is my trade placement button and the trade management button that has my trailing stop inside of the button. And this is a one click for placing your buy or your sell trade or even to close. And this is the buy sell close button EA up here in the right corner. Of course it needs the smiley face, and if you right mouse click on it and go to Expert Advisors properties, you'll see these are the boxes that need to be checked so that the EA works for you. Also in your toolbar, auto trading needs to be, I just clicked it off, now I'm clicking it on, so the little guy with the blue hat needs to be enabled, and that gives you a little green thing right here. And the next thing I think that I want to show you is how to make your MT4 platform actually work better, because sometimes indicators and EAs use a lot of CPU resources and MT4 resources, and your MT4 platform can very easily become sluggish or non-responsive when you try to do certain things, and I'm going to show you how to fix that. Also, this little fix here can help you have more charts open if that's what you desire to do, because the more charts you have open, the more resources your trading system or your MT4 charting system uses, and the more sluggish and slow your MT4 trading platform can become. So this will help speed up the response time, the responsiveness of your MT4 platform, and I think it's a very important thing to do. So what you do is you go up to Tools on your toolbar, click to open, click Options, and then under Expert Advisors, these are the two boxes that need to be checked, so that's very important so that your EA will work. Under Trade, you need the one-click trading checked. And under Charts, this is what's very important to keep your MT4 platform more responsive and less sluggish. And it has to do with the max bars in history and max bars in charts. The default setting is 250,000 bars in your history. There's no reason for you to have that many bars in your history, so just change it to 5,000. That's totally adequate. The max bars in your chart also is default 250,000 max bars in your chart, so just change that to 5,000 and then click OK. So now your toolbars is set up so that your MT4 platform is optimized. And the next thing I want to show you is how to take my EA and put it into favorites. So here under Navigator, Expert Advisors is where you'll find my EA after you load the template onto a chart. And now I think that it's really a great idea to put your EA into your favorites. You can put anything else into favorites that you like, that you want to have very quick access to. For instance, some of the scripts that I like to use to close all the trades or do certain things, I always have them in my favorites. So to get my EA into favorites, just left mouse click and click Add to Favorites. And then if you go into favorites, now you'll see that my EA is in favorites. So anytime you want to drag this to a chart, say that you're using some other trading system that you like and it doesn't have any trade management or trade placement, and you want this because this is just, it does everything that you need it to do just with one click. For instance, on my neon breakout, I could drag my button over onto the chart. It's really easy to find once it's under favorites, and then deciding how you're going to trade or what time frame are you in. This is a 1 hour time frame, and you'll see that I have a lot of preset files here, but I give you all these other, these are from previous trading systems, so just ignore all those. If you have any of my trading systems, you already have those preset files. But I've made new preset files for the Pro. This is the Pro currency strength meter template that comes with all of these preset files. So you have to decide what you're trading and how you want to trade. So I'm in an AUD USD H1 chart. That's considered a day trade chart, so I could choose day trade 1 or day trade 2. So we'll choose day trade 1, and it loads the inner workings with all of my preset files, all my settings for day trade. And the stop loss trading stop time frame is set at 30 minutes. You can change that to 1 hour if you want to, and that'll make the stop loss and take profit settings wider. So if you want to be more cautious and you're trading smaller lot sizes, the wider the stop loss and take profit, it increases your risk if you let a trade go so far as to become stopped out. So you have to use smaller lot sizes when you're trading in the 1 hour time frame. So I have the day trade set file set at 30 minutes because that keeps your stop loss and take profit not so wide, and that means that your risk is less and you can have a slightly increased lot size. And the wonderful thing about this little trade button is that it will place your stop loss and take profit lines directly on your chart, and the take profit is at a 1 to 2 risk to reward ratio. So that means that the lines placed on your chart and with your broker at the same time will be a risk to reward ratio of 1 to 2. So the take profit is double what the stop loss is. So if your stop is 20 pips, your take profit is going to be 40 pips. And that's how this button EA is set up, to automatically place your stop loss and take profit at a risk to reward ratio of 1 to 2. This is the max spread points. Now I do want to mention that we call everything points instead of pips in this EA. And the reason is that I give you several set files for trading indices or CFDs, and they are called points by the MT4 coders who created the MT4 platform. CFDs are always named points. They're not named pips. So in order for this EA to work on not just currencies but on CFDs, we had to call everything points. So just don't pay any attention to that, because this is the same as max spread pips. So everything has an extra 0 on it also. That's to make the CFD preset files work. So you have to learn to interpret this as max spread points really means max spread pips, and 80 really means 8. So the maximum spread that this will allow you to place a trade is 8 pips, and that's fairly standard. Usually for gold you need 10 pips or so. For some of the other CFDs you need a lot more points or pips, but in CFDs we call it points. So for the CFDs you're going to have a max spread that's much wider than what you see here. And the slippage point, that's actually 3 pips. Now the risk percent of account, all of the default settings are at 2%, but if you want to change that, just if you want to increase your lot size, just change it to 3% or even 4%. We have it set at 2% because that's very conservative, and if you're going to be trading CFDs, they use a lot more margin, so you need your lot sizes to be much smaller. So you cannot really trade CFDs at 4% or 3%. 2% is probably max, and your trading account size needs to be a minimum of $1,000, and you also need to have pretty good leverage from your broker. So If you're using any kind of broker that gives you only 50 to 1 leverage or 30 to 1 leverage, you cannot trade CFDs. But I'm using FX Choice, which gives me 200 to 1 leverage, so I can use 2% risk on any CFD indice that I choose to trade. So the default is 2%. If you find that with your account size that it won't place a trade at 2% risk when you're trading either currencies, but especially CFDs, you can always put your risk percent down to 1%. That really helps, and it lowers your lot size. And so if you find that you cannot even place a trade because your account is either too small or the amount of leverage your broker is giving you is too small, your only choice really is to decrease your risk percent down to 1% or add more money to your account. I hate to say that because nobody likes to do that. We all want to grow it naturally. But if you're trying to trade with a $500 account, just currencies, 2% risk is okay. But a $500 account at 2% risk to trade CFDs may not be a big enough account to trade the CFDs. And I found that usually about $1,000 will give me the lot sizes for the CFDs that I might want to trade. And I'm going to show you what I mean by CFDs in just a minute here, but I want to go through the settings for you. The max long trades per symbol is 4. You can change this to 1. If you're using this on a US broker that has the FIFO rule, which is first in, first out, you don't want 4 trades per symbol. You can only have 1 trade per symbol, and it should not be a hedge trade. Of course, they don't allow you to hedge, but first in, first out is a terrible rule by the US brokers. It really can cost you a lot of money. So you definitely need to set this symbol to 1. Just double click on it and change it to 1. 1 max long trade, 1 max short trade. And of course, your broker, if it's a US broker, won't even allow you to hedge, but they will allow you to put on more than 1 trade per symbol, and that's how they're so evil. So you have to learn to protect yourself and change these values to 1 so that you don't put on more than 1 trade for a symbol, because they're not going to allow you to close out the very last trade that you put on. Say you had this at 2 or 3 or 4 like normal, and you had more than 1 trade put on for a symbol, and say your second trade is in profit but your first trade is still underwater, and you try to close the second trade, it won't allow you. It forces you to close the first trade, which means you're going to lose money on the first trade, and then the second trade hopefully makes enough gain to make up for your loss on the first trade. I hope you understand that the first in, first out rule, it's called FIFO, and you need to avoid that trading scenario like it's the plague, because it's just going to lose your money most of the time. So the default is 4, but if you're using a US broker, set these to 1. Okay, so now ATR, stop loss settings, this is average true range. So it's set at a multiplier of 2, which means that your stop loss and take profit is the risk to reward ratio of 1 to 2. So you don't really want to change this. However, if you want a risk to reward ratio automatically when you place every single trade of, say, 1 risk to 3 reward, 1 to 3, then you would change this to 3, and then that would give you a risk to reward ratio of 1 to 3, which is great if you're swing trading. Then you definitely want to have longer targets, but if you're just scalping or day trading, often your targets can't be that aggressive. So now we're to the take profit settings. We want to use take profit as true, and take profit multiple, that's your risk to reward ratio again. And my trade management settings, you can use it true or you can turn it false. If you don't want to use my settings, just turn it false. Default, of course, is true. Now this is a day trade set file, so remember that points really means pips. And remember that on all of these values there's an extra zero, well, except for the percent of trade to close. But anytime it's dealing with the number of pips or points, it's an extra zero on the end, so you have to remember that. So first take profit points means pips. It's not 300, it's 30, so you just have to remove the zero, the extra zero in your mind, and know that your first take profit is going to be 30 pips. And the way that this trade manager works is it's set to close 50% of your trade when it reaches 200 pips. It's set to take a percentage of your trade, which means it's going to close 50% of your lot size when it reaches 30 pips. It's going to close half of your lot size. It's going to lock in 20 pips gain. So it's going to move your initial stop loss to break even plus a little bit more. In this case, it's 20 pips. Then it's going to trail by 10 pips. And so every time price moves 10 pips, it's going to move take profit trailing stop 1 pip. So I know that sounds confusing, but trust me, what it does is once it books half of your lot size and moves your initial stop to break even plus 20 pips, you're going to have a totally risk-free trade. And the only downside to using this is it can limit your profits. So for instance, you experience a small pullback or retracement and you get stopped out because the trail is following your price, and say you had a big retracement and it just totally took out your trade and then it resumed in the previous original direction, well, you're already stopped out, so you don't get to experience possibly a really big move. However, you can always jump in again. You can jump in the trade again, and if you think that there's a lot of strength behind the move, you could go here and you could choose a different set file. Click load and choose maybe day trade 2. So now day trade 2, the first take profit points is 50 pips. Again, the percent of trade that is going to close at first take profit is 50%. So when price moves 50 points in your direction, it's going to book half of your lot size and then bring your stop loss up to break even plus 25 pips. Then it's going to trail the price 10 pips behind the price, and every time it moves 10 pips it's going to move your trailing stop 1 pip more, so that you've locked in 1 more pip, so it's going to trail. And this is a better day trade set file if the movement is very strong or you're trading a pair that has bigger moves than normal, like say some of the pound cross pairs. If I were to day trade the pound cross pairs like the pound AUD or the pound NZD or the pound CHF, those pound cross pairs move very well, and sometimes the pound yen moves very, very well. If you, depending on the values of the currency's strength meter, you would choose the day trade 2 set file if you think that the movement has more potential for bigger movement. This is a more aggressive set file that's going to capture more pips for you. So the rest of this down here is nothing that you really need to pay any attention to. It's nothing important for you. The corner for the button is right upper corner chart, which means it's up here. So if for any reason you wanted to change where the button appears, you have all these choices. Just click the drop down button Now let's consider the fact that possibly you want to scalp and you're in a 15-minute chart and you're using your currency strength meter and you decide you want to scalp. Now you have to decide, you have to know if you have potential for a big scalp trade or if it's just a real small scalp trade. So I've given you two scalp preset files. Scroll down and find my Pro, and you can see here there's a quick scalp. So I would use quick scalp if I don't think the potential move is very strong. First take profit is 10 pips. So the price has to move 10 pips in your desired direction, and once it hits 10 pips it's going to close half of your trade. It's going to move your initial stop loss to lock in break even plus 8 pips, and then it's going to trail by 5 pips behind the price, and every time it moves another 5 pips in your desired direction is going to move the trailing stop 1 pip. So it's going to follow behind the price, and it's a very quick, tight scalping set file, and that's for very fast action when you're not really sure of how strong the move's going to be. If you think it's not a real strong move, you have to choose the quick scalp. Here's the scalp set file if you think your trade has more potential, and you can see the first take profit points or pips is 20, so that's more aggressive. Now often you can get 20 pips easy, but the quick scalp set file you can get 10 pips very easily anytime you want to, just about any time of the day or night. If you're in a more active trading session and the pairs are more active and the range is bigger and your profit potential is bigger, you still want to scalp. I would choose just the scalp set file and not the quick scalp set file, because here your first take profit is 20 pips. That's a much better gain. That's double than the quick scalp. And break even is 10 pips, and it's going to trail by 5 pips, and every time it moves 5 pips in your desired direction it's going to move the trailing stop 1 more pip. So I like this. It's good for newbies who are afraid of missing the moves, who don't know when to take their profits, don't know when to exit, or there's really fast action. If there's a news trade, you can use either quick scalp or scalp. If it's a big news event like FOMC or non-farm payroll, I would choose the smaller day trade set file, or even possibly the second day trade set file where your first take profit is 50 pips. You know, you have to know actually what you're looking at on your chart in order to decide what type of set file to use. And I get emails all the time. What set file do I use? Well, what time frame are you trading in? What currency pair are you trading? What trading session are you trading? Are there any news events coming up that you want to be in a trade for that? One of the things that you can do is get in the habit to use your crosshairs and measure the range. So use your crosshairs. That's 56 pips. That's a pretty wide channel. That's a day trade channel and a 1-hour chart. We're a little bit after Sunday night when the markets opened about 2 hours ago, and this is a 45 pip channel. And so you have to get in the habit of measuring your channel, and then when you want to place a trade, you know that the channel is, say, 45 pips or 50 pips to round it off to make it easy, then you want a preset set file that will book at least half of your channel. So half of the channel could be 25 pips. So I would choose the day trade set file, which will lock in some pips, take half of my lot size when price hits 20 pips. I think that's very reasonable for a 50 pip channel. So you just need to learn how to measure your channels. Here's the Euro odd, which I like, and it normally has a pretty wide channel. Let's measure this channel. Go get your crosshairs, and that's a 120 pip channel. Here's after a big move. That's a 247 pip channel. So even at the smallest range, right there, that's 68 pips. So the Euro odd, this is a 1 hour chart. The channel normally is pretty wide. So if you bought at the bottom of the channel and say you get the little arrow where it hits the top of the channel resistance, take your profit. Or if you're using the trailing stop EA, that's 117 pip channel. So if you got in somewhere around here, I would use the day trade set file where when it reaches 50 pips, that's almost half of this channel, and then it would book half of your lot size and then move your initial stop to break even when it moves a little bit more in your desired direction, and then it'll trail. So if we go back to the currency strength meter template, you have a different kind of channel here, but it's a channel, so any channel can be measured with your crosshairs. So right here, this channel was 42 pips. Now the channel for this is the Euro US dollar in a 4 hour chart, but the Euro US dollar, the channel is not usually as wide. The range is not as wide as, say, the Euro odd. The Euro odd really moves. I prefer it much more over the Euro US dollar. I hardly ever trade the Euro US dollar because the moves are generally not that big. They're not fast. I like day trading in and out. So this is a 24 pip channel. So of course this is a 4 hour chart, and this is Sunday evening when the market's opened. It has an hour and a half to go before the next 4 hour candle. You can see in the currency strength meter here that the euro is a strong orange at 5.8 and the US dollar is weak yellow at 2.7. So people are buying the euro and selling the dollar. That's why right here we have this green candle, because the trend is up. And if we switch to lower, faster time frames, you can see it a little bit better. This is your period separator, which is 5 p.m. Eastern when the market opened. This is a Sunday, but every 5 p.m. Eastern you're going to have this period separator drawn for you on the chart automatically. And you can see this is the first strong candle, green, that shows increased buying pressure of the euro, which is stronger, and the US dollar is weaker. So remember that we sell the weak currency and we buy the strong currency. So we're buying the euro US dollar because the euro is stronger. And the interesting thing, if you look at this currency strength meter in this template, is that the euro is getting stronger, and interestingly enough, it's coming off the bottom of this oversold Fibonacci blue zone. Once the price candle breaks through this resistance and the RSI breaks up through the 50 RSI level, you would have a good buy trade buying off the bottom of a 1 hour chart, and you have the Fibonacci support and resistance. Right now price is sitting on support 2, so you could have a target of resistance 1 or resistance 2 or resistance 3. Now, being Sunday night, currencies are not generally that active in the Asian session, so I would be conservative and maybe aim for resistance 1. So you have to measure the potential target from where you would be getting in. So you would not get in until price broke through this red resistance line, that 16 pip target. So you're going to have to use a quick scalp set file, because that's the quick scalp set file the goal is 10 pips, and if it moves 10 pips in your favor, then it's going to book half of your lot size and move your initial stop to break even a couple of pips later, and that locks in a risk-free trade to you. It's not aggressive, but then your targets are not aggressive. In the Asian session, your targets are very small. These are Fibonacci targets based on previous price action, so these are real, and you could switch to any time frame chart and you would have the same. You can't read this, but it's, let's see, what is the price for this first one? 13539. So let's go down to a 15-minute chart, which is better for scalping. And where's our first resistance? Right here, 13539. So no matter what time frame you switch these charts to, these Fibonacci support and resistance lines are always going to be the same because it's based on previous price, so they don't change. So I think I did probably lose my internet. Oh, here we go. Maybe we're back. Doesn't say wait anymore. Okay, so that shows you the premise of buying off the bottom and selling off the top. You buy off the blue trade zone, Fibonacci oversold, and you would sell off the red overbought Fibonacci trade zone. And believe me, no matter what time frame you're in, don't ignore that. Don't trade against these Fibonacci overbought and oversold zones. Don't ever sell at the bottom. Don't ever buy at the top. You'll be very sorry. You have to respect these. These are based on Fibonacci. These are all my favorite Fibonacci tools, and they're definitely worthy of respect, so don't trade against them. Just a word to the wise. I just moved the Euro US dollar to a 4-hour chart. I'm going to choose a set file for swing trading just to show you. Here's swing 1. It changes the time frame to 1 hour because a 30-minute or a 15-minute set file is not appropriate for a 4-hour chart, and nothing else has changed except for that your trade management settings have changed. The first take profit points is actually 50 pips. So that's your first target, is 50 pips. This is not a real aggressive swing set file. And the break-even lock-in points is 30 pips, and the trailing stop pips is 10, and the step is 1. So this is not a real aggressive swing set file. It gives you more breathing space in the trailing stop. So I would choose this if my target is at least 100 pips, because if it's a strong move and you can lock in 30 to 50 pips, you have a risk-free trade. Then if it continues on to your target of 100 pips or more, and it can follow the price without a big retracement that stops you out prematurely, this is a nice set file. But if you're more aggressive and you want a stronger, wider set file, go look for the set file number 2, swing 2. And this is first take profit is 200 pips. Okay, that's not 2,000. Remember, you have to take off the extra 0. So this is 200 pips, and break even is 75 pips, and the trail is 40 pips, and the step behind it is 2 pips. So what this means is that when price hits your target of 200 pips, well, your target actually could be 300, 400, 500 pips. You could be trading the pound AUD or the pound NZD or something like that, something that really moves a lot. But if it reaches 200 pips, it's going to book 50% of your profit. and then it's going to lock in 75 pips profit. It's going to move your stop loss to break even plus 75 pips. That's a really nice reward for a nice swing trade. And then every time it moves another 40 pips, the trailing stop is going to move 2 pips to lock in 2 more pips. So it's a very wide trail, and this is a better trail for people who like to trade daily or 4-hour charts, and they want a wide trail. They don't want to get stopped out too easily or too quickly. This would be the set file for you to use. However, you have to measure again. Let's change this Euro USD, which is not a great mover, although it had a really nice move here. You can see where the price bounced off the oversold zone. You got a green arrow and it moved up all the way to the overbought zone. Then you had a hot dot, an orange hot dot, telling you it reached its top. Let's measure how many pips that actually was. Somewhere around 180 pips. So that swing set file number 2 wouldn't work for the Euro US dollar because the moves are not that big. I like scalping or day trading the Euro US dollar if I ever want to, but let's try the pound CAD. Okay, here's overbought, and this is very close to the oversold zone. Let's take a look with our crosshair. That's 424 pips, so obviously the swing set file number 2 would be perfect for the pound CAD because it moves enough. Let's try the pound yen, which a lot of people like to trade. I like to trade it. We're in a 4-hour chart. Look at how messy it is just in the overbought red zone. And so you cannot use a swing set file, maybe not even a day trade set file, maybe just a scalp set file. Let's measure down here. That's 168 pips, so that's definitely a day trade set file on the best day. Let's see, if you got in somewhere here where price broke through the green support, and say you got out when the orange hot dot appeared, that's 171 pips. So even if you day traded with the bigger day trade set file, then probably it would work okay in a 4-hour chart. Here's the pound AUD. I think we looked at that. Did we look at it? I can't remember. Did we look at the pound AUD? Yeah, I think we did. Down here, 441 pips. Let's look at the pound CHF. That also is a lot like the pound yen, where it's very messy up here in the overbought area. So I don't see, although let's measure the channel of the overbought area. That's always good to know. 189 pips. So from top to bottom of the overbought zone is 189 pips. So if you sold at the very top, you get an arrow, and you sold at the very top, say when price broke through the line and you stayed in the trade down here where it hit the bottom of the overbought, that's 104 pips. 104 pips for a 4-hour chart. Look at how many 4-hour bars. I would go crazy. Maybe that's worth it to you. So I would probably want to scalp this, but you saw the potential of the pound odd. That was really, the pound odd is great. And let's go look at the pound New Zealand. Now that one moved really well out of overbought territory. It didn't get down into oversold, but let's see if we had gotten in. Well, here you got a red arrow even though it was already below the red line. Down here, that's 416 pips. That's the pound New Zealand in a 4-hour chart. Now for the same number of bars, more or less, look at how many more pips you get. 416 pips. That's definitely worth it. And the EUR NZD, that's a really nice one to trade. Let's look at that. It came off the oversold and then when it hits some resistance here, that's 281 pips. So that would be a nice, that could be the swing set file number 1, or the biggest day trade set file would work for that. And let's see, odd, that's one of my favorites. In a 4-hour chart, coming off oversold, where the price breaks through the green channel line and hits resistance 1. If it hit resistance 1 and the pivot line, you can see this blue pivot line, that's a Fibonacci pivot line, that's 208. So that would be good for day trade set file number 2, because it seems to make really nice moves. Here's where the price broke through, and let's see, right around in here is probably where you would get out. That's 172 pips, so that still is pretty good for the day trade set file number 1. So I don't know. Now I want to show you the CFDs before this video gets too long, because I have all these preset files for CFDs. And the way you find them is you scroll down and you look. Now I'm in FX choice, so these are the CFDs. I don't normally trade all of them. For instance, I don't bother trading Brent crude or this other crude, the oil. I don't trade oil, and I don't trade Bitcoin. Bitcoin spreads are huge. It hasn't been moving well for a whole year, so there's no reason to trade it. Japan index I like in the evening, but it's not tradable. You can see it's grayed out. When they open, you have to kind of wait a whole hour to trade it. And I have a set file for the Japan index. In the morning, I really like trading US 500 index, US 30 index, US tech index. In the morning, I really like trading those between 9:30 and 10:30. There's 2 strategies. The 9:30 strategy, when the US stock market opens, that's very short, quick, explosive, so you have to use the scalping set file for this particular index. I have set files for each index, and they're all scalping set files because the price action can be very quick and strong, but it's over quickly. That's at 9:30 a.m. Eastern when the stock market opens. So if you like a little bit stronger, longer move that lasts longer and gives you more pips, more gain, wait until 10:30. That's a much better time to be trading the US indexes after the stock market has been open for a whole hour. Wait till 10:30 Eastern and then use your scalp set files. The indices that I like, indices CFD, are these down here. So I have set files for all of these. This is the UK 100. That's the top 100 stocks in the UK. This is the German index, or the DAX. These are the top 30 stocks in the German stock market. US Tech Index is the US NASDAQ market, which I really like. And US 30 is actually the Dow, the top 30 stocks in the US stock market. The US 500 index is the S&P 500 index, which I like very much. And then the Japan index, which it's tradable late at night in Eastern time zone and in the morning. And then in the afternoon, it slows down quite a bit. Here's Bitcoin, but I would not be trading Bitcoin anymore. It doesn't do very well. Energies, these are your oils. I don't trade those, but I did start trading the DXY, which is the US commodities for when the US stock market is open, because it totally follows the US dollar. So if the US dollar's really strong, the DXY is going to go up very strongly. Everybody likes to trade the DAX. Right now the DAX is tradable, and basically I think the DAX is stronger for price moving up when the euro is strong. So right now the euro is strong. There's not really anything else the currency strength meter relates to the DAX. the US indexes generally move up when the US dollar's strong. And for sure, the commodities that I showed you, this is the DAX chart, is coming up off of oversold. Price was on support 1. Here's your first target up here. Price is sitting at the top. It has not broken through this red resistance line, so we're not ready to take a buy trade yet. And the RSI, it's strong above 50, but it's red. So price is not ready to buy off the blue oversold zone at this point in time. But if you use your crosshairs and take a look at this range, the bottom of the overbought zone to the top of the oversold zone is 302 pips. We're in a 1-hour chart. You could have used swing trade number 1 for this, or day trade set file number 2 for this, and probably never gotten stopped out. Maybe right around in here, but that's still, if you had gotten in right here when the candle turned red and was very strong and you got stopped out here, that's 240 pips. In a 1-hour chart, that's only 1, 2, 3, 4, 5, 6, 7, 8 hours. You could have made 200, 225, 30, 40 pips. That's very well worth it. So this really can move. Now, not all the time. You can see that it was very flat on Friday, but this was a move. The date was the 7th, so that was Thursday. So Thursday's was really a good moving day, but the downtrend actually started here where price hit the top of the Fibonacci overbought and you got a big red arrow. So price had broken through, and that's where you would have sold short or entered your sell trade. However, it was many hours before it really broke down through the bottom of the red overbought zone. So you didn't have to enter here as long as the price stays below the red channel. When it actually breaks through the bottom of the red overbought zone, that's when you could have entered your trade. Just watch it in a 1-hour chart. Come and look at it every once in a while and choose the appropriate day trade or swing trade set file and just make it a set and forget. Right around here is probably where you would have gotten stopped out on the retracement, but again, if you had gotten in here and gotten stopped out on the retracement, that's 225 pips for 8 hours. So that's definitely worth it, and that would have been great for the day trade 1 or, well, the day trade 2 set file gives you a better trail, a wider trail, so you don't get stopped out so easily. Or you could have used the swing set file number 1, and that would have somewhere right around here in the middle of all of this price action would have moved your stop to break even and given you a risk-free trade, and then continued to trail. That's what I would have done if I had seen this. We have set files. Let me look at all the different set files. Let's go load a DAX set file. Here's DE30. That's the DAX. That's the German 30. And remember, all of the CFD set files actually are scalping. So with a 15-minute time frame, that's going to keep your initial stop and take profit fairly small, not really that big. So if you see price coming off this overbought, or like where we are right now, it's coming off oversold, and if it breaks through there, measure ahead of time what your target would be. This is target number 3 here. That's 225 pips to that target. Target resistance number 2 is 157 pips. Resistance number 1 is 97 pips. So your first target should be approximately 100 pips. Second target is approximately 150 pips. Third target is approximately 250 pips. So you would choose the proper set file, which is a day trade 1 or 2, or a swing, not the swing 2, but the swing 1 would be good for this. That's if price breaks up. and doesn't come back down. If it falls back down into the oversold, then you just wait, and it's untradeable until it actually breaks out of here, and then your actual target is back into the overbought area. So let's see what the target actually is. If you even got to the bottom, that's 292 pips. To the top is over 400 pips. So you can see the range for the DAX and the 1 hour chart is wonderful. I would not play this in a 4-hour chart, but you could play it in a 30-minute chart. And you can see better here that we're nowhere near having a tradable situation, because we have the orange hot dot. Momentum is falling off. But here was your sell that we saw earlier in the 1 hour chart. You can see your entry a lot better in a 1 hour chart. Right here is where you would have gotten stopped out. That's actually 285 pips. So in a 30-minute chart with no significant pullbacks, because your trailing stop, if the settings are wide enough, will accommodate these small little green candle pullbacks, but it probably won't accommodate, bigger candle pullbacks like these right here. So you would have been stopped out probably right around in here. But in a 30-minute chart, that's 274 pips, 264, 243. So maybe you would have gotten 250 pips out of that using the trade manager. The DAX in a 30-minute chart is really easy to trade. Just set it and forget it. Let the trade manager manage the trade for you. And we have all of these other set files for the other indices. I'm just going to show them to you. Go down to the Pro CSM. This is the DAX. That's the commodity set file, which really follows the US dollar. So if you want really easy trading, trade the DXY and follow the US dollar. When it's strong, buy. When it's weak, sell. Then we have a gold scalp set file and a Japan index. We have a UK 100, which I actually like to trade. US 30 is the Dow. That follows the US dollar very well too. US 500 and US Tech. Video, I think that you get the idea of how important it is to learn how to use your crosshairs when determining what set file to use. And of course it depends on what time frame and what currency or indice you're trading and what trading session you're in. For instance, in the Asian session, your targets have to be very, very small. You cannot use a swing set file or a day trade set file. You have to use scalp or even quick scalp for almost everything that you're trading in the Asian session. During the London session, you can use day trade or swing trade set files, and especially if you're in the higher time frames. But if you're going to be trading in the lower time frames, you can't use a set file that has settings for a big range. So it really everything depends. You have to learn all of these conditions to decide what set file you want to use with the trade manager. But it will really help you determine what set file to use if you use your crosshairs and figure out your range and your target from overbought to oversold, and even the width of the overbought and oversold. For instance, from top to bottom of overbought, that's 126 pips. From top to bottom of oversold, that's 116 pips. Right now, the DAX wants to go down again, but I would not be selling the DAX in a blue zone when it's towards the bottom of the oversold blue zone. Now here, I would have, at the top of the oversold blue zone, I definitely would have gotten in here and sold that. That was a move of approximately 118 pips. That's definitely worth it in a 30-minute chart. That's just a couple of hours. But I don't sell at the bottom of an oversold zone, and I don't buy at the top of the red overbought zone. So that's something that you just have to really get fixed into your mind. And then you have your Fibonacci support and resistance for your targets. Can't really think of anything else right now. If there's something that you need. Oh, one other thing that I did want to mention, this currency strength meter, you cannot expect to pair up a blue with a red. Blue is very strongly oversold. Red is very strong buy. Remember that you're buying strength and selling weakness, but if you were to look at this pair, you'd see that the big move is already over. And same with the CAD NZD. People are selling the CAD and buying the New Zealand dollar, but if we go look at the chart, so let's apply the NZD CAD. If you look at the CAD, it's very weak. People are selling the CAD and they're buying the New Zealand dollar. So this is the NZD CAD. So the price is going up. NZD is very strong red, and the price has been going up since the beginning of 5 p.m. Eastern when the market opened on a Sunday. So New Zealand dollar and the Aussie dollar are usually either super strong or super weak right around the time of 5 p.m. Eastern and a couple hours after that. So any cross pairs that you see with the New Zealand dollar or Aussie or the yen, those are very tradable pairs. However, you can't expect to combine a red with a blue and get anywhere because the trend usually is already over. The big move has already been made. If you see, however, the Aussie is a strong 6.3, you could go look at the Aussie yen because combining an orange with a yellow is much more realistic. You have a potential to catch the beginning of a bigger move, whereas if you try and combine a red with a blue, the move's already over. So I would look at the yen very weak with the euro, which is strong, or the yen with the Aussie, which is strong. And so let's do that. Let's look at the Aussie yen. Here's the Aussie yen. So the Aussie is stronger than the yen. So people are buying the Aussie yen. And it started right at 5 p.m. Eastern. That would have been a nice trade at 5 p.m. Eastern. But looks can be deceiving. So it looks like a pretty good move, but if you actually use your crosshairs to see, that's only 27 pips. So the Aussie yen does not usually have pretty strong ranges. However, it hasn't hit resistance 1 here, so maybe you could get up to 30 pips. And this is a 30-minute chart, so several hours to get 30 pips. I'm sorry, that's just not too exciting. The other pair we could go look at is the yen with the euro. Let's take a look at the yen with the euro because it's better to pair an orange with a yellow because then you have a better chance of catching the beginning of a trend. However, it can be close to flat. Now, right now, the euro yen, the euro is strong at orange 5.8 and the yen is weak. So the euro wants to go up. However, it's been flat. So if you had gotten in here at 5 p.m. and maybe gotten out on the first red candle, that's 15 pips. The target to the red resistance is 22 pips. So again, the range is just not there. Here's resistance 1, that's 44 pips. So if the euro strengthens and the yen remains weak, it could possibly hit resistance 1. But you have to keep your eye and make sure that the euro stays strong and gets stronger, which it is, and the yen is getting weaker. So at some point, it's probably this green candle is gonna move up and probably break through the red resistance line. If the euro stays really strong and the yen stays really weak, that would be a fine buy trade, but what's your target? Say you waited according to the rules, wait for price to break the red overhead. Resistance 1 is 19 pips, resistance 2 is 30 pips, resistance 3 is 47 pips. So we don't know how strong this is going to be. It's been in oversold territory for really a long time. This is since Thursday. So this is when it went into oversold territory on Thursday. So it's been in oversold territory Thursday and Friday, and we don't know. The euro has to get a lot stronger. If you look at a 4-hour chart in the euro yen, then you can get a better perspective of where it's been in the middle for a long time, since the end of January, maybe even longer than that. Scrolling back, only on January 2nd did it drop into oversold territory, and it's been in between oversold and overbought since January 2nd. So it's not going anywhere. So why would you ever want to even consider trading the euro yen? However, if you take a look here, and possibly that's where it hit some kind of support, that's 111 pips. But look at how many 4-hour bars to get 100 pips. So that's, for me, not a tradable pair. So I think you can see now how to analyze what your potential target is and what type of currency pair you might even want to be looking at. Some of them just don't have very big ranges, and I found that the pound cross pairs have the biggest ranges. Those are the ones I always want to be looking at. Right now the pound is strong orange at 5.0, and it's strong in comparison to the US dollar. So we could take a look at the pound dollar. I have a bad internet connection tonight, so that's why my Forex Factory calendar headlines is not filling in. So the pound dollar was in overbought territory for a really long time and has just dropped out of it. So when it dropped out of it here at the bottom of the overbought, then that would have been a nice entry if you had missed. The only better entry would be to sell at the very top of the overbought. That's much better. But then look at the range it goes into. It's just this very narrow range, and until it drops out of the bottom of the overbought, it just doesn't really go anywhere. So that's, for me, the pound US dollar is not a fun pair to trade. I would much rather trade the pound odd as one of the better examples. Now, if you had sold at the top of the overbought range, use your crosshairs, say you got in right about there, and you got out when the green hot dot appeared, that's 170 pips. Then if you measure your range, from your entry to the first candle, that's 66 pips. And if you had just held on and stayed in the trade, that's 110 pips. So all of those 4-hour candles for 110 pips, no thank you. However, if you had waited for the price to break through the bottom of the overbought and maybe exited when the green candle appeared and the green hot dot appeared, that's 86 pips. So you can see, still in a 4-hour chart, this is not a very tradable pair in my estimation. Too jumpy, too much going on with Brexit. Used to be years ago when the pound dollar moved really well and the pound yen moved really well. They don't move very well since Brexit started because the economic situation is too uncertain. So there's not big moves made by the banks and the hedge funds because they don't want to be caught in a bad situation. So they're more cautious. For some reason, the pound Aussie moves really well. And so right now, during this economic and political climate, I would concentrate on the pound Aussie. Here's the pound strong at 5.0, and the Aussie is even stronger at 7.0. So actually the pound is being sold and the Aussie dollar is being bought. So the pair pound Aussie is going down. So that just has so much more potential for range. Let's look at the pound Aussie. Starting to go down. We're in a 4-hour chart. This is the 5 p.m. Eastern period separator, and the pair is going down. It's coming out of overbought territory in a 4-hour chart. So that's really great confirmation. And you have the hot dot, which shows the top. So right in here would have been a good aggressive sell entry. If you're going to be conservative, wait for the price to break through the green support line. RSI is strong, oversold, has pushed below the 50% level and is red and going down. So this would have been a really great entry right here on Friday, but of course you don't trade late day Friday, or at least I don't. But being 5 p.m. Eastern, well, right now it's like 8:15 p.m. Eastern on a Sunday night, and it's still not really ready for a sell entry unless you're very aggressive. You could do it, or jump down to a 1-hour chart. Make sure that the pound is still weaker than the Aussie, which it is. So your sell entry would have been before 5 p.m. This is late Friday again, and this is right after 5:30 p.m. Eastern, and you had the orange hot dot. Prices below the red resistance line, so that means you're only going to be looking for sell trades. The hot dot appears, which is your alert to look for a sell trade. So price crossed through the black support, and as price is sitting on support 1. So this is actually probably a good sell trade if you want to trade at the end of the day on a Sunday, and use your crosshairs, figure out what your target is. Support 2 is 47 pips, 40 pips. Support 3 is 80 some pips, and to the top of the oversold zone is 206 pips. But go back in time and see when was the last time it actually entered oversold in a 1-hour chart. Well, it came out of oversold on February 5th. So 5 days ago it came out of oversold. So it's been in oversold territory, and then it went into overbought territory. So this would have been the perfect place to buy. Then you had a bunch of consolidation range, which maybe you would have gotten stopped out here because that was a pretty big pullback. But here's your re-entry, and then a pullback, and then you hit the bottom of the overbought red zone, which it never really pushed into that overbought red zone. It never went up to resist. It just, I think the top was resistance 2. It never pushed further than that. Use your crosshairs to see what the range was. The overbought zone is 138 pips, but it never pushed even past resistance 1, so it didn't want to go any higher. So it bounced off basically resistance 1. That would have been your sell entry right here, and that would have been a sell on Friday, but like we say, we don't do that. So right now we're just sitting where it's coming out of overbought. It's sitting on support 1, and if it broke down past support 1, support 2 is 42 pips, support 3 is 88, and down here into the oversold zone again is another 200 and some pips. That would be a fine target, since it hasn't been but 5 days since it was in oversold. So the pound AUD is traveling. That's what you want. You want a pair that really travels, and you get some distance out of a trade. It has potential for distance. So I would say from here to here, being a 200 pip target, that's very realistic, because like I said, it was only 5 days ago when it came out of the bottom of oversold territory. So a 200 pip target on this is very realistic. You actually have to analyze your charts, use your crosshairs before you ever decide to enter a trade. This applies to whether you're swing trading, day trading, or scalping. The same principles apply in the daily chart and the 5-minute chart. And I use the 1-minute chart to refine my entries when I'm scalping. And that's if I know the range is small or I just want in and out. And, there's different conditions. So that's about it. I can't think of anything else to say. 20 minutes ago I wanted to stop, and here I am still talking. This is a long video, and I'm really sorry for that. But I thank you so much for taking your time out of your busy schedule to watch this video. And I really hope that you've learned how to analyze your charts and decide what your targets should be, and then choose the appropriate set file for what your game plan is, because you have to plan your trade and then you trade your plan. That's an old stock trading phrase, but it applies just as well to Forex trading. So thanks again for watching, and good luck in your trading. Happy trading, and I wish you all the pips in the world. And now you know how to do it, so go out and get them. Thanks. Bye.